everybody, welcome to the Daily Market Commentary for Tuesday, the 12th of December. Hope everybody had an amazing trading day and that the markets treated you well on this fine day. Thank you for joining us on our session. For those of you that are new to the channel, welcome. Glad you found your way here. We do the same thing each and every day on the Daily Market Commentary. We look at the same 10 to 12 futures markets, trying to identify high probability turning points for trades that may happen going forward. So let's go ahead and get into it. Most important thing to remember is when we identify levels, we do not take our lines off the charts. We leave our lines on the charts, keeps us accountable to the levels that we identify, and it allows you to see how trades will play out over time. Now, occasionally we will send out updates on the trades, whether or not we are getting into them. Just because the lines are on the chart doesn't mean that we always would enter the trade. So let's go ahead and get rolling. Starting with the S&P. So the S&P today, there's still, like I said yesterday, was no great reason to do anything in the S&P. There was no strong pullback into a quality buying opportunity. We talked a little bit about this buying opportunity there. I did have Dennis pointed out today, for those of you that follow us on the Twitter page, Dennis pointed out this little 5-minute area right here. So this is a pretty good structure on the 5-minute level. I will tell you, I don't really trade many 5-minute levels anymore. I've found that my results have gotten better when I've moved to bigger time periods. But this area does give you a pretty good setup. So nice find today by Dennis, one of our listeners. Now you can look at this area right in here for potential short if you enjoy riding roller coasters with no seatbelts. I am not shorting the S&P at any of these levels. There's been a few levels of selling potential that has been created, but I'm not gonna just be jumping in on most of those. So as far as the S&P goes, there's really nothing on here that really excites me. The Nasdaq, on the other hand, ooh la la. So looking at the Nasdaq, today we almost got our Nasdaq long filled in this little region here. Now remember, it's in purple, so it's a smaller time frame level. Anything on a smaller time frame level, we're going to have a slightly lower degree of probability. And that level was found from this little bit of fair price area before a strong rally up. That fair price area tells me that in this zone, the market believed that this was fairly priced and there was enough buyers and enough sellers to keep price there for a brief period of time before price moved away. Price only moves away because there was nobody else willing to sell at this low of a price. What we don't know is how many more buy orders have been stacked up in that period of time since then. Not only that were left behind, but also may have just decided to jump on board, finding this as a good place to buy when price does indeed return. So we have this area kind of in play. Now, the other level that's also in play is the breakout long. So this breakout long, this acted as a ceiling in the past, a resistance point. We came back up to it again, chop, 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 fell away. Came close to it again, have been unable to pierce it. Once we pierce this thing, where's our overhead resistance? Well, it doesn't exist. There's no overhead resistance above this point. I would much rather you buy an all-time high than short one. And I'm okay buying a breakout of an all-time high because this is where you can sometimes get some parabolic moves up and can give you some good opportunities on those breakouts. Now, when you take a breakout like that, you're going to place your stop below the prior pivot low. So that is still playable in the Nasdaq. Crude oil, let's talk about this crude oil area. So yesterday on the recording, I had talked about how I was not a fan of the fact that we were chopping along sideways before coming into the area. So it reduced the probability of success, and because your profit margin just wasn't there. There was no profit margin at all for us to use. So since we didn't really have a strong profit margin, remembering that our profit margin is going to be the opposing fair price zone. If I enter at this resistance up here, my other fair price would be down in here. Now, price did continue to go up to the pivot, almost to the pivot, before reversing and then having a very strong drop. So if you've given yourself a wider zone, you may still have worked out okay in this thing. Matter of fact, even no, not even on the 4-hour level would you have been okay. But you may have still been okay on this thing, kind of trading it back down. As it stands right now, I'm going to remove this area here, obviously. On the 4-hour, I do, there is a little bit of some support right through here where we have a little bit of sideways, price action, that little balance of price before a big move up. So on that 4-hour time period, that's showing up there. It'll show up obviously on the hourly as well. And on the hourly, it shows up here as going through it for a much longer period of time. But that could still be a potential. Another potential is this area right in here if you're looking for a reversal. I'm not a fan of either one, frankly, simply because, oops, wrong button. When I head to the daily, you can see that we're kind of just chopping along here, and that sideways price action is always the hardest time to trade. Gold, let's take a look at gold. Now, gold is starting to come out of the daily level. Now, this is remember, this was a daily level of support and an area where we may get a reversal out of here. What I did talk about on this daily level is, if you want to trade this, I would believe it's best to trade using the candle-to-candle style of trading. Remember what the candle-to-candle style of trading is. On a daily time period, we would only get long if we get higher than this previous day's high. Our stop would then go below this previous day's low. This is a fairly wide area for a lot of people. 10 points could be too much, but if you're just trading candle-to-candle style, this is a potential reversal point, and you would be getting long as it starts to kind of come out of this range. So an opportunity to get long if you're trading candle-to-candle style. I couldn't find a good reversal point on the smaller time frame charts to justify getting in. So while we're in the daily level, it's still not a quality enough trade for us to be in. So once again, just because the lines are on the chart doesn't mean it's always going to be a great trade. We keep them on there just so we can see how they move. Let's take a look at our bonds and our currency markets. Bond markets, I kind of feel like I got to get more aggressive if I really want to get filled on some of these trades in the bond markets, but that's what'll get you killed. When you start saying, well, I'm just not getting filled. Oh, well, you got to be okay with it. The bonds have done, well at times, and this is really one of those times where I just don't feel like trying to force it. And I feel like if I tried to force a trade, then it would be much worse off. So I'm going to let the bonds just kind of be. The Aussie, we don't really have anything in the Aussie setup. This little area down here may be okay, as we have a little region right through here that might be an okay opportunity for somebody to be interested in it. It's right around the Australian dollar's opening time, right through here. So it may be one worth investigating. I'm not going to put lines around it. I don't think it's a quite high enough probability for me to take the trade, but if you are of the ilk, it may be a setup that you're interested in. The euro. So yesterday we talked about this pivot in the euro as we had this move up, a drop, and then price came down out of there. So price did get us a reversal in that pivot. We've almost come down and hit our price target on the euro reversal. So for those of you that were able to catch that one, and we talked about it, it may reach right at the London Open, and that's exactly when it met entry. So this one, if you're already in it and you've got a nice profit, you may want to take some protection and move that stop down a little bit and allow it to kind of get down. So do your happy dance. Euro level working out okay. Canadian dollar, we are still hovering over that breakout. And this is a breakdown out of this level. Looking at it on a daily chart, it's much easier to see. Now remember, we like breakdowns when they give us room to roam. There is a little bit of support through here that we'll need to be aware of, but I believe there's a very good chance that it could make it all the way down to this region. Okay? And then certainly last but not least, as we're almost done, I'm going to take a look at two more. The Great British Pound is still nowhere near the area that we had spoken of is the higher probability setup. Looking at this on a daily period, we are still in this bigger trend channel that we put together a while ago. If we get down a little bit lower into here, there may be another opportunity, but I'm just letting it be. And it's very small range daily candles, so no reason for me to get into that thing. The Japanese yen, we have come close to our hourly entry. So if this thing gets me an entry here, now remember, I may not have enough profit margin, so keep in mind your profit margin rules as you set this thing up. So hope everybody had a great trading day. If you've got any questions, feel free to send me an email, chuck@iiefinancial.com. Until tomorrow, remember, keep yourself protected and always, always trade with a stop loss. I'll see you soon.